Hello, everyone, and thank you for joining me for yet another session on the Let's Get Technical series. I am Kavita Agrawal, the founder of EXP Invest, and today we have connected to talk about railway stocks. What about railway stocks? Naturally, railway stocks have been giving wonderful rallies in more than a year now. And I was noticing in my study that railway stocks, firstly, even though the rally looks very attractive, when it comes to actively participating in them, they are pretty risky in the sense that in a short period of time, the level of volatility there on the downside and upside is pretty high. Secondly, even if you want to do swing trading or whether you want to do long-term investing, you have to be very particular about when you're entering it, because if you're not timing your entries properly in the railway stocks, there is a good chance that you get stuck in the no action period, incur a lot of opportunity cost, and prematurely exit the stock, which is pretty painful because last few times what we've seen is strong consolidation, breakout, strong rally, lots of regret. So today I want to discuss with you what are the patterns of some of the popular railway stocks and how do we navigate them, how do we work around with them. Right? On and off, I keep trading in railway stocks also. So this is the RVNL chart, and as you can see, I have some lines already drawn on this. The trend lines have already been drawn. Now the trend lines have been drawn taking into consideration the most recent price trend. So you can see that there are lots of overlapping or touch points on this trend line, making it a pretty valid point. And this same trend line, this lower trend line, was then cloned to also create the higher level. Now what you can see is that what I was telling you, that timing is very important, is if you do a FOMO purchase in railway stock, you will see a rally of 100% go behind you in just 1 month, maybe like it happened here back in November 22. But then if you're not timing it correctly, there's a good chance you get stuck and experience massive drawdown in the next 1 or 2 years. So here, within 1 month, the stock went up 100%, but within the next 3 months, the stock also went down 30%. Any sane person would see the stock retest the high, not go above the high, fall back down 30, would be compelled to book losses out of fear that the stock might just go down more. But then immediately the stock breaks out again. Second time, what did it do? RVNL, it rallied and it went up almost 130% in just 2 months. But again, if your timing was not correct, you would have been stuck in the stock for a period of 4 months with a downside of around 15% roughly. Right? Again, the stock rallied 63%. So this way, the stock has done not once, not twice, but nearly 6 times now. What is the stock doing now? After taking support at the same trend line that we mentioned and the 100 EMA, it has again given a massive 150% rally in just a matter of a little less than 2 months. Right now, a lot of people have again started to get active in railway stocks and they want to make fresh positions. But is that a very good idea for you? We will assess now. Now, I will bring back RSI here, and I want us to make a very important observation on the RSI. Let's hide the volume for once, just focusing on the RSI. What you will see here is on RSI, every time the RSI comes back down, it barely touches the level of around 45 here and turns back up. Now, what this 45 is, basically, it is the support zone of the RSI in the bull range. So there is a phenomena called RSI range shift, in which what happens is the RSI shifts its range of operation depending upon the underlying momentum. So here what we are seeing is that every time the RSI or the stock price takes correction on R, it comes down, touches around the level of 40 to 45, and then it gives a major bounce back. So while it really hurts waiting for this, or rather witnessing this rally escape without you being a part of it, it is also not very prudent to buy it near the high. You will also not notice on the railway stocks a very significant indication of a potential decline. Why? Because these corrections that you're seeing, even though on an absolute term, they seem pretty big, 30, 40, 50%, they seem pretty big, but against the context of the trend. So if I draw Fibonacci on these uptrends, you will see against the context of the previous uptrend that unfolded, the corrections which are happening are actually part of the trend itself. So they are usually not more than 50% of the entire uptrend that has unfolded. It's around like mostly 38.2% on all the Fibonacci's that I've drawn. What we are seeing is the correction has been near the level of 38.2% of the previous rally, or in some case even 23.6%, which means that the correction, it is never fair to judge a stock on the basis of the absolute movement it has done. Everything needs to be seen against context. Whether you're studying the RSI, whether you're studying the volume, whether you're studying the correction, whether you're studying the waves, everything has to be in context to each other. Volumes are increasing. When are they increasing? What is the context? Is the price increasing or decreasing? Now, having seen the RSI and understood that the RSI is super bullish, let's also take a look at the volume. And this was the daily time frame that we are still operating with, right? Since the rally began. And you will notice one more thing that I'm doing, that is the past trade analysis. If you want to understand how to trade in a stock, the best way to do that is do the momentum and the price analysis from at least few price cycles in the past. That will give you a sense of what is the stock's tendency in terms of taking a correction, ending a correction, starting a rally, ending a rally. You need to understand what the stock is capable of doing in all these circumstances. Now, paying attention to the volume, I can see very good, fantastic volume pickup every time the stock rallies. And whenever the stock comes into a decline, the volume again dries up. Then when does the volume pick up again? When the price goes back into rally, which is very good. Right? You see here again, very good pickup in the rally. Then last leg of the rally, volume pickup slowed down. Stock went into correction. Again, the stock started going up. Volume started to pick up. So this stock has been giving strong uptrends with strong volume pickups, going into breather or correction within the uptrend and then going up. But that being said, you don't want to stay stuck in the stock at the wrong time. Why? Because suppose you did a FOMO purchase the last time the stock rallied, and around the end of January 24, you bought this. What would have happened that within your holding period in two months, you would have seen a downside of 30%, which is pretty stressful. And it would have taken you as much as 120 days, which is almost 4 months in a very bullish market to reach break even. When the underlying market is very bullish and your investment in a particular stock is not even at break even, staying invested will become really difficult. And plus, you need to ascertain whether you want to participate from a short term or a long term. So you can't become, it's not fair for your capital if you keep switching your own aims in the market. If you keep switching from being a short term trader to a long term trader based on profit and loss, you're not going to succeed in the long term. Even when you're doing short term trading, it's important to set your goals from a long term perspective. So your entry in a bullish stock when the stock comes to its bullish trend support zone, and then it gives you some sort of indication that I'm going to start rallying again. In this case of RVNL or other railway stocks also, that indication typically comes from volume. So in case of RVNL, basically now, suppose I don't have a position, if I want to make a new position, I will under no condition make a fresh entry at this stage. I will wait for the stock to come back down at least first to 23.6%, which is around 480 rupees, or for RVNL, I think it can take a good 38.2% correction against the current uptrend. I will wait for the stock to retest around the level of maybe 410, 420 to make a fresh position, right? I will start accumulating once the stock at least breaks below 480. So 480 to 410 becomes a potentially very attractive accumulation zone. Right now, absolutely not. One primary reason is also the trend line. Now see, this trend line resistance is another thing that we have to pay attention to. So this trend line is what I'm talking about. Now suppose this stock breaks above this trend line. Now, I am not assuming it is going to give a break because the last 4 times it has approached it, it has not given a breakout. But if it does give a breakout, what will be my next step? If it gives a breakout and sustains above it, then I will assess how the volume is reacting, how the RSI is reacting, and then take a, on the 15-minute time frame itself, if you judge this stock right now, bit of a negative divergence has already started to occur, which means I will need to maintain a pretty tight stop loss here to safeguard my capital, right? So given that the stock has created a previous high around the level of 597.9, my stop loss will be around the level of not lower than 595 from a short-term perspective. And even from a long-term perspective, if you want to hold the stock, great, you can continue to do that. The return profile of the stock is still very attractive from a long-term perspective, despite of the many swings that it is giving. Based on the very clear-cut patterns which RVNL creates, and based on the massive movements that it gives, I would say this stock is a very good candidate for swing trading. It is a fast mover and it is a momentum mover. So I categorize stocks as fast mover, slow mover, or super trenders or momentum movers. So this is actually, fast mover, super trender. Why? Because it moves very fast and it goes into super trend. Now these stocks are very attractive for making money when you are on the right side of the trade, but also they are very harmful when you're on the wrong side of the trade. Why? Because if you enter these stocks at the wrong time out of FOMO, you will usually end up booking pretty big stop losses, because stop loss, so you have to maintain. There is no second doubt about that. If a big stop loss gets triggered, that means a big drawdown on your portfolio. Moving on to the next stock, IRFC, and we'll do the analysis from the same perspective. But here, let's start from scratch. And I want to also cover a fresh perspective in this, something that we did not touch upon in RVNL analysis. So now I've removed all the drawings from IRFC. So what I can see is a little bit of structure breakdown has happened on IRFC, in the sense that based on the RSI that we've seen. So the RSI on the daily time frame for IRFC was actually maintaining a bullish range of 50 to 80 plus. Recently, in the correction that it gave, it broke below this bullish range. Now, even though it slightly broke below this bullish range, it's still bullish, but slower momentum. The momentum has slowed down for IRFC is what I'm seeing. In the past, what you will see here is IRFC has given multiple strong rallies and is also a very good candidate for short-term swing trading as well as long-term investing. And the volume pickup also now has started really strong. RVNL is a bit of a missed train, but IRFC seems like it has more potential to go, because the rally that has started in IRFC has only started from the level of around 170 rupees for a fresh new rally, and it has only gone up 20% so far. It definitely has more upside. Let's see. This was actually the main resistance. And from what I can see here, that main resistance has been breached pretty well with a strong volume uptick. Coming one time frame lower, again, what I see is the 75-minute time frame also has shifted to the bull range. Since when? Since 10th April 2024. And since then, it's been making higher highs and higher lows as well. So when would my potential entry price be? I would expect IRFC to come down and retest this trend line or this buying zone again. So between the zone of 188 to 180 rupees is where I would potentially try to make an entry. So potential entry. Now, because I've identified the zone, I will set an alert there around 189 to 180 rupees. That is a potential entry. Let me also mention the zone. So potential entry is around 188 to 180 rupees. And we are setting the alert at around 189 rupees, which is good for us. And now when the price takes a dip, we'll get the alert and then we can make a decision as for our execution, right? Accelerated rally is yet to begin in IRFC. And I think it still has a lot of steam left in it to give at least one more leg of rally. Now, one thing very interesting about IRFC is that it adheres to Fibonacci projections really well. What do I mean by Fibonacci projections? If I take every rally and every correction and if I draw this line, you will see that the next peak that happens around key Fibonacci levels. Like for example, from the rally to correction, the next peak that occurred was exactly 3.618 times of the first rally. And again, but within that also, if you see, there have been smaller structures. If we capture these also using Fibonacci extensions from top to correction here, this is the bottom of the correction, you will see the very next peak that got unfolded or registered coincided with the 1.618 times of the very previous rally. And again, if you draw the Fibonacci here, Fibonacci extension from the peak here, this one again coincides, like this one we already saw coincided with the previous 3.618%. Now for this next rally that started from here, or we can actually consider this entire thing as one rally, the next one that you're seeing here coincides with this previous one's 6.618. So there's always some correlation with respect to Fibonacci extensions that you can find in IRFC charts. Now the thing with Fibonacci extensions, one problem is that they only become obvious in hindsight. You can't predict them. But having them plotted gives you a good sense of where a potential resistance can lie, especially for stocks which are dealing with virgin area or forging new lifetime highs. There is no past resistance areas for you to pay attention to. So for that purpose, the Fibonacci extension is a very useful tool. So the very recent full rally and correction that I'm seeing is the period between 25th October to 14th of March. So I've drawn that and I can see that it's only yet reached 0.618, but given the past history of the stock and also using the concept of confluence, I would assess or I would conclude that the target for this stock should lie somewhere between the 3.61x of the previous rally to 1.618 extension of the immediate rally that occurred between it. So this would be my potential target zone for the stock. So now I know my potential entry zone. I know my potential target zone. Next question is what would be my stop loss? Now I already told you IRFC also is a super trending stock and it's a fast move. And the stop loss here, unfortunately, cannot be smaller than this previous low, which is around 170. So my stop loss will include a little bit of a buffer, say 1 or 2 rupees, and I'll set the stop loss at around 1. So even if the price comes to the lower edge of my zone, it is still a 7% profit. From the upper edge of my potential entry zone, it's around an 11% stop loss. And the minimum target that I'm looking at is either 44 or it can also be stretched up to 70. Worst case scenario also, if my identified entry zone is good, even the worst case scenario, my risk reward ratio is more than 3, making it pretty attractive trade. So this is something that I want to keep an eye on. So what are the things that I'm going to do? I'm going to set alerts. One is the price alert, which I already showed you. The next is I will set a RSI alert also at the level of around 41-minute time frame. And I will give the same message, potential entry zone arrived, ? Right? It is very important to maintain your notes. Now, initially, I started maintaining notes in a separate Google Sheet, but I realized it is not a very effective way of doing it because if I have to constantly switch between apps for one task, it becomes very difficult. right? So I want to maintain all my notes on the charts without cluttering my charts. So I'll just use alerts and I will have my messages hidden in that, because again, I don't want the messages to jump out at me when I'm randomly looking at a stock, because that's very distracting also. So now I use messages in my alerts, so I know what to look at, how to look at things, or I will use something called a call out text. So we are done with the first 30 minutes of the session. So I will quickly take a look at the comments and see if anybody has asked any pertinent question about railway stocks or about the analysis that I've done so far. And after that, we will move on to the questions which our Zoom participants might have for us. After that, if we have time remaining, then a stock request form has already been shared in the comments. You can, whoever has filled up the stock request form within the session, we will go in a chronological manner. And depending upon the time remaining, we will answer your questions. The stock request form. So we'll turn attention to our Zoom members. If any of you have any questions, feel free to ask them now or input in the chat. So we have Kunal with us on Zoom, and he's asked for full screen chart. Unfortunately, Kunal, I have a bit of a setup which does not allow me to go full screen. One reason why I keep a shorter chart screen is that I wanted to focus on what I'm talking about instead of getting distracted with the whole screen chart thingy. Plus, it's convenient for me in terms of my multi-platform setup. Sahil says lots of learning from last 30 minutes. Thank you so much, Sahil. You're always very kind. So you're also asking mid or large cap chemical stocks that we should watch for making new entries. Sahil, trust me, there are just so many chemical stocks doing so great right now. UPL is one such stock that you should definitely pay attention to. I think it has bottomed out, established the first higher high, given RSI positive divergence on the daily chart, and you will be hearing about that. And as far as stock recommendations are concerned, don't worry. You're already a Trade Together program member. You'll be seeing recommendations come in from me. Mohit is also with us on Zoom, and he's asking about So I will take a look at IRCON. In the meanwhile, guys, if you are wondering how to join the sessions on Zoom and be a priority guest, you can join my Telegram channel. It's very easy to join my Telegram channel. I'll just give you a walkthrough right now. So this is the Telegram channel. I don't know if you can see this. It's probably too small. So let's just make it a little bit not so small. Yeah, there you go, better. So this is my Telegram channel, Trade with Kavita. The link is Trade with Kavita. What you can do is either click the link from the comments or go hop over to your Telegram app and just write Trade with Kavita. Just make sure you don't join any of the fake channels. There are lots of fake channels running with my name with small variations. Be careful. They sometimes have more followers than my original account. The reason being that these fraudsters keep circulating names of whoever's getting more traction. And so over the years, they've accumulated a lot of followers or subscribers. But make sure you're joining the correct channel, which has the exact same name. One good way of validating is that you'll see high quality content in my channel. You'll see my analyst comment. You'll see my locked messages. You'll see information about my webinars on the channel. So join this channel. Before every live session, I post the link for the event where you can register and join us on Zoom. So that is something you can do. I also post daily quizzes on the Telegram channel, which can help you refine your learning one question at a time every single day. So let's take a look at IRCON. And in IRCON also what I'm seeing is that very strong uptrend, but bit of a missed train. You don't want to join this rally right now because see, I personally have already identified stop loss and target. This was my stop loss, gone, target almost achieved. Overall risk reward ratio not attractive. So even for IRCON, I would wait for the stock to correct down to at least the 20 EMA. Seems like a very good entry zone on IRCON. See, for all railway stocks now, there is one common element which acts as repeated support. There is one common pattern. In the first stock that we saw, RVNL, it was the volume. In the second one that we saw, it was the Fibonacci ratios and the RSI on the 75-minute or the daily time frame. In RVNL also, RSI was there. In IRCON, 20 EMA is a very good 20 EMA of the daily time frame. This blue line that you're seeing is 20 EMA daily time frame. So this is what you have to refer to. And obviously, don't make a blind entry that Kavita said 20 EMA comes and we enter IRCON. Not like that. 20 EMA comes, you reassess the chart again, you look at volume, you look at RSI, and then you make a call. Everything needs to make sense. And also, if you see this 20 EMA, it also coincides with this previous high. And this previous high usually acts as a very good support zone. So I would say 288 to maybe 284 would be potentially a good entry point. So I will do the same thing, 290 pe potential entry point. I will set an alert, 288 to 284. So 290 aane se, I know it is close to a potential entry zone. I have to do my analysis here. My homework is set. No pressure on my memory whatsoever. So that is IRCON for you. Sahil on Zoom has asked another question, PVR Inox. If you guys have attended the Market Outlook series of the past 2-3 weeks, you know that media stocks is looking very attractive and media stocks are giving new rallies.
On PVR Inox specifically, if you see, there is a really nice little positive divergence which is unfolding on the daily time frame. And the first ever higher high since the major correction that started since 7 September 23, the first higher high has also been established. So I think PVR Inox is pretty attractive for the next 6 months or so. However, right now it is taking a bit of a correction, and I would like to see, like, it has taken a bit of a resistance at the 250 EMA on the daily time frame, and I want to see some correction before I make a fresh entry here. So where would the potential fresh entry be at? I think the zone between the 20 EMA and the 100 EMA could potentially be a good entry point. But since there's not much price activity, or the stock doesn't really give a lot of repeating patterns, if you see, the chart is a little bit uneven in nature, not like the railway stocks which have repeating patterns. We will have to make a judgment call once the correction is behind us. So right now, absolutely no go on the entry. However, if the stock starts and creates a new higher high, either it goes above 1472 or it continues to create new lows, maybe it can come down to, I'm seeing 1400 is a potentially very good support, right? That would be a better area to enter in. One thing is for certain, that when it comes to the stop loss should be around the level of 1350, not smaller than that or not tighter than that, because you need to give the stock a lot of room, because this is a stock which is just coming out of a major correction. It is expected to take baby steps, maybe even revisit the support zone, right? So just to be safe, keep a comfortably big stop loss. And as for the target, since it has created a positive divergence on the daily time frame here, I would expect it to at least retest the previous high, which is 1875. Right? Risk reward ratio overall is pretty attractive. Entry point is a little uncertain at this stage. So we'll now move on to some requests submitted on the stock request form by our on various social media platforms. We'll move on to Webel Solar for Shashankji. So you are asking for 6 to 8 months holding period, and your average cost price is 611 rupees. So Webel Solar, I can see very strong uptrend, and uptrend backed by volumes. Very good indications on the RSI also with respect to bull range. And in fact, within the bull trend, I think the stock is showing few very good signals. Number one is the RSI is right now very close to the support zone of the bull range. Number two, the price is close to 100 EMA, which has acted as support multiple times in the past since this rally has begun. So I think from an entry perspective, very attractive. The 75-minute chart, I thought it was showing a positive divergence, but no, there is no positive divergence. But I think it still looks pretty attractive. So I would actually set a stop loss in this stock at the level of 444 and continue to hold for at least another leg of rally. See here on the weekly time frame, what I can also see is that a trend line, this trend line has been very recently breached. So I would expect more upside to unfold here. And cloning this trend line itself onto the very next resistance that I'm seeing, I would keep my target somewhere around 1500 to maybe 1700 on this stock. For next 6 to 8 months, it looks pretty attractive to me. Next query is from Prasoon Kumar on our stock request form, and his request is also for IRFC. So we'll move on to the next stock, and that is GMR Infra, right? Now for GMR Infra, your cost price you've mentioned is 97.5. So basically you've mentioned the CMP, it seems. And thank you so much for joining us, Prasoon, on ET Live. Be sure to join my Telegram channel so you can join us on YouTube next time. So what I can see is GMR Infra, and this is true for most infra stocks, that negative divergence have started to form on the larger time frames, and volume pickup on the upside is not as impressive. In fact, volume pickup has been higher on the downside in the more recent leg of rallies, which makes me a little uncomfortable. On the daily time frame also, massive negative divergence in the previous high and in the previous peak that was forged. Here, higher high on the price, lower highs on the RSI, which means negative divergence. And then the last leg of rally also that has been forged, I'm not very happy with the volume profile that I'm seeing. There might be more upside left. We might see GMR Infra test this lifetime high of maybe 120 rupees. But because of the risk reward ratio that it is offering me right now, I wouldn't be very interested in making a fresh long position here. Sure, if the stock comes down to 90 rupees, maybe I will take a consideration, right? So 90 rupees, maybe I'll consider it once it comes to 90 rupees for a fresh entry, maybe for a short-term swing for the 120 level of lifetime high, with, of course, a stop loss set somewhere around the level of 85. So again, this 20 EMA and 100 EMA is where in between that is where we'll try to take fresh position. But if the 100 EMA gets breached for good, then get out of the stock. I think the entire market is going through a sector churn right now, and you don't want to be investing in the sectors which have rallied yesterday. You want to instead take positions in sectors which are going to rally in the upcoming months, like chemicals, IT. I think they have huge potential. You want to be very careful of investing in IT or infra or banking, because it's very easy to get carried away by projecting your recent past into the future. It's called the recency bias in the market. Let's see, we've got fresh messages on Zoom, so we'll pay attention to that first. So I can see Kunal has written, wonderful analysis for RVNL. Is it possible to do similar one for Tex Rail and Titagarh? Wagon, absolutely, Kunal. Let's take a look at Tex Rail for you. So Tex Rail, again, see, I am not a fan of entering stocks after the rally at all. I always want to buy bullish stocks when they're taking a dip. Here, I am seeing on the weekly time frame, number one, negative divergence develop. Positive, on the positive note, the volume pickup has been very attractive on the last leg of upside. What that tells me is that the upside has steam, but that doesn't mean I should enter the stock right now. Because even in this strong upside, the correction which is possible from after a strong rally on Tex Rail, it being a fast mover, is 30 to 40%. I have no interest in getting stuck in the stock for that downside. Considering the very previous peak that I'm seeing here, I would want to wait and see what the stock does once it comes below the level of 220 and then take a call. Right now, it is a missed train that I don't want to chase. Moving on to Wagon. So on Titagarh Wagon, also very similar. The rally in Titagarh Wagon is actually a lot stronger than the rally in Tex Rail. And the volume pickup is also extremely beneficial. And it has recently given a massive breakout with very strong volume pickup, right? So all of these things are pretty attractive. Entry strategy, however, obviously very tricky. It seems like the stock is right now taking a little bit of a period. And before it came into the sideways consolidation, the very last leg where it created a high was forged with very strong volumes, which means pickup is still pretty good. And 75-minute time frame is showing a retest of the 20 EMA. Now, for a stock this strong, I might be willing to take a risk and enter the stock because the volume pickup up to the last bullish candle has been extremely promising. So Titagarh actually looks attractive even for fresh entry even now. That being said, from a short-term perspective, at least my stop loss is going to lie at the level of 1580. Basically, the previous correctionary low. Technically, this is still a little bit tighter. A safer stop loss would be 1469, and this is what I mean as problem with stocks that are very fast moving. Sure, they will give you massive upside in a short period of time if you're on the right side of the trade, but if you're on the wrong side of the trade and it comes and triggers your stop loss, good chance that you're going to lose 15% of your capital invested. So your allocation should be pretty small. You're not more than 2 to 3% of your total portfolio. See, in the market, don't think about only growing very fast. Also think about preserving your capital from erosion when you get wrong, and use a risk reward ratio or a capital allocation strategy such that even if you're 60, 65, 70% wrong, at least you're not losing your capital. So that's why I use the risk reward ratio of minimum 3 all the time. And if my risk is very high, absolute risk is very high on a particular stock, like for example, Titagarh here, then what I will do is I will reduce my allocation there to reduce the impact on my portfolio. Once it starts going into profit, then you pyramid it. That's not a problem. But when you're initiating the position, start with a small allocation. Being said, let's also assess where the stop loss should be. So what I'll do is I will take the most recent and I'm going to draw a trend line on that. So Alt T is my shortcut for drawing trend line on an accelerated rally. Let's use the peaks. Usually when a stock is giving accelerated rally, it's always better to use the peaks for drawing your trend lines, is what I have learned in my 12 years of practice as a technical analyst. And waterfall rally. So see, using this, I'm able to get a lot more zones. There is a very interesting concept which I will be talking about a lot in my upcoming advanced swing trade technical training program. It is about the slope or the trajectory of different stocks, right? How to look at corrections, how to understand what a stock is doing, even if it's going up, but if its momentum is declining, how to assess whether a stock is giving a new rally or is it getting exhausted. There's a whole study to it. So here I would expect the stock to at least rally up to 2828, which from the current market price is a good 40-50% upside. Right? I would expect that, and I can actually move the stop loss a little bit higher to the base of the previous one because this looks like a nice fresh leg. If this breaks below this level of 1580, I would consider that as a lower low and not be attracted to it. We have Akhil on Zoom who's asked for Jupyter Wagon analysis. Kunal, I hope the Titagarh Wagon analysis was useful. I know it took a little bit of time, but then it had a lot of things which needed to be talked about. So that's that. L. Today only JWL actually triggered an alert for me, but I decided not to make a fresh position just yet because you see the very previous rally that we saw here, the volume pickup was there, but it wasn't as much as the earlier side of the trend. So that can be a sign of exhaustion. Plus, if you see the RSI is definitely giving a little bit of a negative divergence on 75 as well as daily. So I'm not very excited about this stock from a fresh perspective for making a fresh long. Also, from a trend line perspective, I'm seeing strong resistance coming in right here. And this is a missed train. I would want to see the stock take a correction, and maybe you see the positive range for this stock is around the level of 40. So on the daily time frame, if the RSI triggers 40 for me is where I would be interested. But I'm not going to set an alert on JWL because JWL is not part of my watch list. So now moving back to the stock request form, we have a member, Mr. Jeevan Reddy. He's mentioned the BOM code. So for stocks which are not listed on NSE, right? You know what I'll do? I'll just Google this code. Remediium Life Care Limited, REM Life. Got it. REM Life. Let's look at REM Life for you. Will it increase? Will it go upward, further upward? I find the stock request session pretty intriguing because I get to look at stocks I would otherwise probably never look at. Yeah, it does look like Remediium has started forging a new rally. It has created higher highs, and the recent upside has also experienced some upside. I would, however, not recommend you to allocate more than 1% of your total portfolio because it is very illiquid, very risky in nature. And the market is offering so much opportunity right now. You don't want to go out of your way to unnecessarily risk your capital. I am a very risk-adjusted trader, so that would be my 2 cents to you. So Amirji has also asked for IRFC. So you're asking what is the target for the stock post-budget? See, it's not possible for me to predict what is going to be post-budget target or pre-budget target. I've given you a target based on the price action analysis when I did the IRFC analysis. Not sure if I gave the targets. I'm pretty sure I did give the target, this range. So I've already mentioned the target. Now, I don't know if it's going to be achieved post-budget or pre-budget. The timeline analysis is not something that I do. Kunal, you also want the target for Titagarh. Titagarh, like I was saying, it is currently... okay, it is looking very attractive. So if you had to make fresh entry, I would expect this to break above this trend line based on the massive volumes that I'm seeing. And the next target would be around the level of 2,770 rupees for you. Basically, I would expect it to achieve or test the very next trend line support. And this trend line, if I increase the brightness of this trend line, then I can go back and I can see that this trend line was basically forged from the very first wave of rally. So because this upside, this rally that we are seeing is part of the primary rally is unfolding right now, we can expect this target. But whether or not this trend line is going to get breached is not something I can predict at this stage. We will have to study the volume, the momentum, the price activity when this trend line gets approached to take a call. Based on what I'm seeing around this lower trend line right now, it looks like we can expect a breach there. We've done JVL, Juman and Lovish from YouTube and ET Market respectively. Both asked for that. So I hope you found that analysis useful. And guys, please, if you're watching this live session and if you think what I'm sharing makes a little bit of sense, don't forget to leave a kind comment and don't forget to give a thumbs up to the live stream because that's really important. It helps with the algorithm and stuff. Algorithm has been more kind to me than YouTube. Instagram, I'm very close to reaching 50,000 followers, but YouTube, I'm still around 6,000 followers. Not sure what I'm doing wrong, but I think your engagement can really help me. So please do subscribe, like, comment, and whatever it is that other people tell you to do that. Let's move on to IRB for Dhruv. So you've bought IRB at 68.9 and you want to know what the target price is. Basically, you bought the stock really recently. And like I said, infra stocks, there is something that I am not a big fan of. IRB is not an exception. Massive negative divergence. Now, the thing is, in the situation of this kind of a negative divergence, what I'm also seeing is that IRB has been giving mixed volume activity. If you look at these spikes on the volume MACD chart, sometimes it's against the big red candle, sometimes it's against the big, green candle. But overall, the upside that you're seeing, so basically, see, this entire phase was the correctionary phase. So volume being mixed is fine. What happened up to this rally? Fine. Up to this rally, whenever the price pushed forward, we saw volume pickup, which means when the volume was strong, participation was strong, which is a sign that when the stock goes into rally again, we can expect momentum continuation then. And the momentum was also pretty strong. Now here, I need to do a broader analysis of the trend. So trends are not very clear. So I'm going to remove the drawing and I have to, because I've cleaned up all the drawings here, I need to make a mark or something. Yeah, noted. Now let's draw some fresh trend lines. Fine, let's try with this. This is a very good channel, but the thing is, it looks like the stock has already reached the upper end of the channel and is taking correction. And here we see volume pickup, but then like I said, look at these 3 candles where the volume pickup actually happened. This was actually the hanging man pattern. The shooting star has the body at the end. But what this basically means is that the price, so there was a lot of tussle between bulls and the bears. However, at the end of the day, as long as the price doesn't cross below either the lowest point, right, or doesn't go above the highest point, it seems like a little bit of an indecision here. So in IRB specifically, I wouldn't want to make a fresh position until the stock breaks above the level of 78.4 or maybe 5 to leave a little bit of buffer there, until and unless it does that. Why? Because on the weekly chart itself also, if you see, some negative divergence has forged. So maybe we can expect some correction here, and would like to see the stock either establish an uptrend, or if this uptrend is being corrected, then I would like to see A and B has unfolded. I would like to see wave C. So wave C can come to 58, it can come to 50, it can also go deeper to the level of 40, 42. Right now it's very difficult to pinpoint what it's going to do. Kunal, see, with you're asking target for RVNL again, right, with a cost price of this thing. Fine, let's take a look at RVNL for Kunal and give you a target for short term with a cost price of 365. I think I mentioned the target that I am expecting a bit of a breakout from the trend line here, and I can expect the level of no. So what I told you is that the volume is very high here, but the trend line is still being tested. So here I would set a stop loss, but if it sustains above the trend line and gives a breakout, right, in that case, the next target that I would expect would be around 900 rupees. But then again, given the past price activity, I would be more focused on maintaining a tight stop loss here rather than looking forward. So you want to leave the upside open while also preserve whatever unrealized profit you have. And your cost price is 365. So you've pretty much bought it at the beginning of the right. So around 530 is a good stop loss for you to maintain here, with a potential target at 900 rupees. Fresh entry not recommended at all. So with that, we come to the end of today's Let's Get Technical series. I will see you in my Telegram channel. Don't forget to join that. And I will be live again on Friday in my Market Outlook series, where we discuss Nifty and Bank Nifty and intersector analysis. As for the members who filled up the form, the stock request form, but have not received a response due to shortage of time, we will no longer be able to evaluate them. But I do request you to join the next live session and ask your query again during the live session, so I can attend to you first. If you ask your questions too late, then your chance of getting a response reduces significantly. So thank you so much for giving me your time. I will see you again on Friday at 5 p.m. Namaste.